All right, everybody. I hope that you guys had a phenomenal weekend. We're going to pick up pace. We have a huge week ahead of us. I'll ask that you guys keep your mics muted during this quick presentation. We're going to be going over XRP and Canton technical analysis in today's video breakdown. We'll take a look at the fundamental backdrop as well. I typed out the report for you guys. As always, we start the week off with the report on Sunday and Monday. I didn't send it out yet because markets are moving and I wanted to make sure that nothing was updated as we roll into Asia session before I chuck it out to you guys for the start of the week. But we'll read thoroughly through this. We'll paint the landscape, risk on, risk off, what's going on, take a look at the backdrop, pay attention to all the fundamentals on the forefront that we need to be mindful of, going over different scenarios. And then also towards the end of this, I want to break down my XRP trade for you guys in detail why I was taking the scalp position. I've rolled a few $1,000s. I'm not going to disclose the amount, but a couple $1,000s over into Fulcrum, and I'm going to be intraday trading probably for about a month straight, very aggressively. XRP's price action utilizing order flow. So you guys are going to have those updates more frequently in the XRP analysis chat. But I also want to break down those trade ideas, kind of what I'm looking at, take a look at the order flow, looking at levels that I'm paying attention to possibly buy or reverse my analysis and start to look for sells from. So you guys will get a little bit into that as well. And then let me see what else. I think that's all that I have for you guys today. Then we'll wrap it up and just yeah, tomorrow's a holiday. So after that, we probably won't have another Zoom call until, unless the landscape substantially changes tomorrow, we probably won't have another Zoom call until Tuesday. All right. So let's dive into this, starting off with the XRP analysis. Once we're done that, I'll also slap on Canton as well, because we do have some updated levels to be mindful of in terms of the dark pools and deltas this week. All right. So our last XRP analysis I put out to you guys just a couple of days ago. February 12th. As always, we constantly been updating, playing these levels level to level, using the dark pool, showing the public how accurate this community is. I mentioned to you guys XRP Canton quick weekend accurate update, keeping you all in the loop. I said XRP has held support at the dark pool at $1.39 and is now making its way towards the first hurdle at $1.60. If we want to see higher prices, buyers need to become aggressive above $1.60. Now, looking at where price action is at, we have yet to see that aggression by buyers. We came up into the $1.60 dark pool. We now have a new dark pool at $1.62.5 that we need to see overcome. But overall, the bullish targets were met. And so I was able to take a nice scalp position from roughly around 50 cents up into, $1.50 up into roughly about 52.5 cents before I closed out my scalp. But nonetheless, my overall bullish thesis was correct that price is going to make a nice run up for $1.60 before seeing sellers step in and show their hand. So I want to go over that in today's breakdown as well. I'll break that down thoroughly in detail, utilizing order flow, taking a look at levels. But nonetheless, just trying to show you guys that here at CYPRX, we have some of the most accurate levels to be mindful of and paying attention to as retail investors. All right. So before we jump into that, getting the boring stuff out of the way first, because believe it or not, this stuff is what, at the end of the day, moves market sentiment. Market sentiment, obviously, of course, is what we need to pay attention to as intraday investors, long-term investors in the digital asset landscape for the sentiment and the directional bias. All right. So starting off and just reading thoroughly through today's report. Now, this might get updated as we roll over into Asia session, depending on fundamentals once Asia session starts kicking off in the next couple of hours. All right. So just be mindful of that. That's why I haven't sent it out to you guys yet. As of time of writing, the total cryptocurrency market cap is still holding around the $2.3 trillion dark pool level, which remains a critical area of institutional interest. After attempting to break above last week's highs near 2.4 trillion, sellers stepped in aggressively and defended that region, forcing price to retrace some of its gains. This reaction confirms that markets are still extremely sensitive to uncertainty and that participants are hesitant to fully commit risk capital until there is greater clarity across the global macro and geopolitical backdrop. The fact that crypto is stabilizing above $2.3 trillion, that was at time of writing, shows there is still underlying demand, but conviction remains fragile as traders weigh multiple external risk factors. So if we come over here, we take a look at the total cryptocurrency market cap, and we jump down to, let's say, the 4-hour time frame. You guys can see that last week we bottomed out at roughly around $2.2 trillion. We saw some trapped sellers at lows, and then we saw buyers become aggressive enough to break above the triple moving average, break above the $2.3 trillion dark pool, and make an attempt to break the last week's high. Last week, Sunday's February 8th high came in at 2.42 trillion. We saw buyers make an attempt to break that. However, sellers defended. You can see here they trapped buyers, they became aggressive, and they pushed price now heading back down towards the dark pool. So this week, the question is, can sentiment start to support risk on assets? And can we see buyers defend at these previous levels where they had trapped sellers, became aggressive, and pushed price higher? Or do we see price break back below $2.3 trillion, try to make an attempt to come and test the buyer strength down here at these lows? If they prevail, do they break these lows and start to make their way back down towards 2.05 trillion? All right. That's kind of where we're at right now. Can we see buyers defend at 2.3, turn it into support and start to trail higher? Or do we see it turn into a resistance, sellers become aggressive below and start to push price lower? All right. As we continue to progress, one of the most important developments currently influencing market sentiment is the escalating tensions between the United States and Iran, of course, right? Both sides have recently confirmed that meetings are scheduled, but at the same time, both nations have also issued threats, and the U.S. has reportedly positioned bombers as a precaution in the event diplomacy fails. This creates a binary outcome scenario for risk assets. Here you can see this mentions Iran is pursuing a nuclear agreement with the U.S. that delivers economic benefits for both sides. This is from Reuters, February 15th. This was reported on Sunday. The U.S. has dispatched a second aircraft carrier to the region and is preparing for the possibility of a sustained military campaign if the talks do not succeed. For the sake of an agreement, it is essential for the U.S. and also benefits in areas with high, quick economic returns. Foreign Minister Deputy Director for Economic Diplomacy, Hamed, said, according to the semi-official Fars news agency, Iran has threatened retaliation as well against any U.S. attacks, but the official struck a consolatory note on Sunday. On Friday, a source told Reuters that these two jurisdictions are set to talk on Tuesday at the Geneva Trilateral Commission event, all right, which is also the Lunar New Year. So I wouldn't be surprised if we start to see, and it's the day banks come back to business after a holiday, right? So I wouldn't be surprised if a lot of the volume and volatility starts picking up on Tuesday, heading into the remainder portions of the week. The most bullish outcome would be a confirmed diplomatic agreement that removes the threat of military conflict entirely, which would likely restore confidence and allow risk assets like crypto to recover strongly. A moderately bullish scenario would be a constructive talk that reduces tensions and confirms that military escalation is off the table, which would help stabilize sentiment even without a full agreement. However, the most bearish scenario would be a breakdown in negotiations, leading to military conflict, which would almost certainly trigger a broad de-risking event. In that environment, capital typically rotates out of risk assets like crypto and equities and into safe havens such as the US dollar, gold, and government bonds until uncertainty clears. At the same time, tensions surrounding Greenland continue to quietly influence global political stability. Leaders from Denmark and Greenland have confirmed that President Trump remains serious about acquiring the territory, citing its strategic importance and natural resources. Although discussions have begun and are described as constructive, very few details have been given and released publicly. You can see that here. This is an article from just yesterday. The leaders of Denmark and Greenland do not think the crisis is over. So I highlighted that for you guys, okay? It's still lingering in the background. That does not mean that it has the headline sentiment right now, but if we see things pop off, this is again just another contributing factor that has weighed on risk assets over the past consecutive couple of months. So we can see in the headlines that it's still an uncertain factor. As long as this situation remains unresolved, it contributes to a broader environment of geopolitical uncertainty. Markets prefer clarity. Remember, we went over that in detail in our little fundamental backdrop lesson the other day, a couple days ago. And unresolved geopolitical disputes tend to suppress risk appetite because institutions are less willing to deploy capital aggressively when the future outcomes are unclear. A peaceful diplomatic resolution that satisfies all parties would likely support global market confidence, while any prolonged uncertainty or escalation would continue to weigh on risk sentiment. NATO said on February 11th that it had launched a mission to strengthen the presence in the Arctic, part of an effort to diffuse tensions with the Denmark alliance prompted by Trump's push to acquire Greenland. But here you can see they mentioned we don't think it's over. Moving on, another geopolitical hotspot on our radar has been the Russian-Ukraine front. Right now, there is still cautious optimism as a U.S. brokered peace talk is scheduled to take place again in Geneva this week on Tuesday. So same time as the Iranian talks are set to start as well. We have Ukraine and U.S. and Russian delegations set to take place at the same time. Ukrainian President Zelensky has expressed hope that these talks will produce meaningful progress, but also noted that Ukraine has been repeatedly pressured to make concessions. Previous discussions have been described as constructive, but have not yet produced breakthroughs. I'll highlight this in bold. Okay. If these upcoming talks lead to tangible progress or a roadmap toward ending the conflict, this would significantly improve global risk sentiment because war is one of the largest drivers of economic and market uncertainty. However, if talks stall or tensions escalate further, it would reinforce defensive positioning across the financial markets. So be prepared for this. I've went through some fundamentals and highlighted these things for you guys as well. Like, think about how many retail traders have no idea that the talks in Iran, the talks in Russia, Ukraine, the talks in Greenland, all these things are set to take place this week on specific dates. Here we can see again on Tuesday, these leaders are set to meet, talk about these things. Right. So on Tuesday, what are we going to be paying very close attention to in this community? Any of these headlines on Trump's true social media, Reuters, any Bloomberg articles that break the beginning of New York session that could, steer market sentiment for the day? Because we're going to be capitalizing on those intraday moves. At least I know I am. Right. In addition to geopolitical factors, there's also a critical legal and economic catalyst approaching. Does anybody remember, before I show you guys, I want to see if you guys have been paying attention. I remember weeks ago, we postponed this event that's set to take place and it's set to start from February 20th to June, summertime, where we're in this kind of lingering environment where what could come into fruition. Does anybody remember? Remember we mentioned this date? Yeah, yeah, yeah. Yep. Who said it? Who said it? Tariffs. Who said tariffs? I don't know who said it, but pat yourself on the back, right? Remember in the fundamental section, it was like maybe at the beginning of February, end of January, and the tariff Congress vote got pushed back. And I highlighted that it got pushed back until February 20th as the first date that Congress could possibly vote on the tariffs. However, that does not mean Congress is going to vote on February 20th. I showed you guys in a fundamental piece from Scotiabank or ING Bank or one of the major banks. They said that the vote could take up until June. So February 20th marks the day that we could start to see a possible vote from Congress, but it could take all the way up until June. So I wrote here for you guys. In addition to the geopolitical factors, we are approaching a major catalyst starting February 20th, when the U.S. Supreme Court may rule on the president's authority to impose broad tariffs using emergency powers. This discussion has major implications for global trade, interest rates, and investor confidence. If the court limits tariffs authority, it could reduce trade uncertainty and potentially lower bond yields, which would support liquidity and risk assets likely. However, if the ruling increases uncertainty, this is the biggest factor right here. If we see anything of the ruling increase market uncertainty about the futuristic outlook of the economy, tariffs, inflation, whatever, or it reinforces aggressive tariff policies like retaliations or whatever the case may be, then it could tighten financial conditions or increase market uncertainty, i.e., market volatility. All right. Markets are extremely sensitive to trade policy because tariffs directly impact inflation, growth, and corporate profitability. So we will be paying very close attention to these things in the coming days ahead. As for the currency markets, we're still paying very close attention to the Japanese yen strength. The yen historically has been considered a safe haven currency, and its strength often reflects rising global risk aversion. Additionally, the yen has been widely used as a funding currency for carry trades. We know that, where investors borrow yen at very low interest rates to invest in higher yielding assets like stocks and crypto. And when the yen strengthens, it often signals that these carry trades are unwinding, which removes liquidity from risk assets. Any continued yen strength could therefore act as a headwind for crypto and equities in the short term. So be mindful of that. Okay, we're still keeping that on our radar. As for monetary policy expectations, so we went over the geopolitical backdrop. We covered global geopolitical hotspots, Russia, Iran, right? Greenland. Then we went into tariff implications. Now we're going into FX, right? Currency pairs, US dollar strength, yen strength, safe haven strength. Now we're going to transition and focus our attention into the data. Like I said, we have a jam-packed week this week, okay? So recently we know Stronger labor market data and hawkish comments from Federal Reserve officials have reduced expectations for immediate rate cuts, which has limited upside momentum in risk assets. However, last week we got cooling inflation data, and that has kept the door open for approximately 2 to 3 cuts, but not until later this year, likely in the second half of 2026 if they do materialize. Risk assets, we know, tend to perform best when markets expect easier monetary policy because lower interest rates increase liquidity and encourage investment into higher risk, higher return assets. Ideally, for crypto to enter a stronger bullish phase in terms of data and what the market's pricing in, markets would need to begin pricing in earlier rate cuts or receive confirmation from the Federal Reserve that monetary policy easing will occur. This week is particularly important from a macroeconomic perspective. Despite being shortened due to tomorrow's President's Day holiday, investors will closely monitor Federal Reserve meeting in minutes, so that's going to be very important. GDP data, consumer spending, we have inflationary readings such as core PCE, housing data, manufacturing activity, and corporate earnings all set to come out the remainder of February. Okay. These reports are going to provide us insights into the health of the economy and influence expectations around monetary policy. Stronger economic growth without excessive inflation is generally positive for markets, while persistent inflation or economic weakness can create uncertainty and volatility. Now, I have a portion written down underneath of this fundamental piece for you guys, a little lesson for you guys underneath. I'm not going to read it today, but once I send this report out, you guys can read it at the very bottom. To wrap this up, overall, the crypto market remains at a critical inflection point. As long as the total market cap holds above the $2.3 trillion level, the structure remains constructive and opens the door for a potential recovery toward the $2.6 trillion to $2.89 trillion range as confidence returns and liquidity improves. However, if price loses the $2.3 trillion threshold, especially alongside any worsening geopolitical conditions or tighter financial conditions, this will signal weakening demand and could open the door for a deeper correction towards the $1.84 trillion region, where stronger institutional demand will likely be reassessed. The key takeaway overall is that markets are currently being driven less by technical factors and more by global liquidity, geopolitical stability, and monetary policy expectations. Any positive diplomatic resolutions, easing monetary policy expectations, and improving economic clarity would support a bullish recovery, while any escalations in geopolitical tensions or persistent inflation or any tightening financial conditions would likely delay recovery and keep risk assets under pressure. All right. So with that out of the way, now you guys understand the current backdrop, what to be mindful of this week. Like I mentioned, if there's any updates heading into Asia session, I'll update today's report so that you guys can thoroughly read through it. First, taking a look at XRP, bullish scenario, because right now, as long as price is above the daily low, which comes in at about the $1.34 threshold, i.e. right here at this higher low, I'm still going to be looking for buying opportunities on XRP. So going over those opportunities first. This week, if sentiment can remain optimistic, if we can see the more bullish leaning outcome, and we can see an increased appetite and demand for safe haven, right now my goal, aggressively day trading XRP, is to minimize my risk and maximize my upside return. So I have 3 areas of interest where I'm going to be looking for buys. The lowest area of interest is going to be my smallest risk area, medium risk area, and high risk area in terms of stop losses. So with that being said, even though right now, as long as price is above this level, I will definitely be still looking for buy positions. Even if we were to dip beneath this level and come all the way back down here into $1.22 to possibly $1.11, I will still be looking for buying opportunities. However, if we break this low from roughly about $1.36 and below, I will probably shift and look for some intraday scalp positions to take XRP's price back down into this level before I seek to buy. So let me break that down for you guys real fast. Okay. The first area that I will be monitoring on XRP's price for a possible buying opportunity is currently where we are hovering at now. Can price respect this triple moving average and this previous higher low at roughly around $1.45 to $1.44? If it can, we're likely to start to see buyers step back in, trapping sellers and pushing price back to the upside with the first bullish targets coming in at $1.60 for some nice scalps. The second position that I'm going to be looking for is if we can come back down into the higher low at roughly around $1.42 to $1.40 for the same scenario to see if buyers can step back in, trap sellers, give us a delta held pattern, and start to make higher highs and higher lows, pushing price back to the upside with, again, bullish targets coming in at $1.60. And the last scenario that I would be paying attention to for the most immediate buys is if we drop all the way back down into $1.36 to $1.34, seeing if buyers can defend, react positively to this area, trap sellers, and push price back to the upside. If we can, that would be such a great risk to reward to take price back up into $1.60. So these are the three buying opportunities that I'm looking forward to this week. If we can see any of these levels defended by buyers, see sellers trapped, and see buyers become aggressive enough to start to make our way back to the upside. Obviously, of course, we need that risk on environment that I just talked about and discussed in the fundamental report. Now, I will temporarily shift my bias to sells on XRP if we start to see a break beneath these levels. So, sorry, I know that this line is kind of small. Let's change that. There we go. So you guys can see it a little bit better. If we start to break beneath these areas, so $1.42 is broken, we start to see it act as a resistance, and we start to see sellers overpower buyers, that will be the first sign that I'm going to start to possibly look for scalp positions. The second confirmation would be if we break $1.36, i.e. this previous higher low. This is the daily higher low. If we start to break that, sellers overpower, and we start to see it act as a resistance, that then is going to open the door for me to start to look to take scalp positions back down into this deeper level area of interest at roughly around $1.18. If we see this sell pressure come forth on XRP and we do take some scalps down into $1.18, I will reassess. I'm not just going to expect lower prices because we could see a scenario where buyers defend from where they bought from back here. So I will reassess price action on whether or not buyers defend, trap sellers, and become aggressive enough to start to push price back to the upside, or whether sellers smoothly transition through this level, turn it into a resistance, and seek lower prices. So for now on XRP, I'm predominantly looking for buys as long as price is above $1.34. If price can break $1.34, start to turn it into a resistance, I will temporarily shift my bias to look for some sell scalps down into lower levels. But because right now I firmly believe we're operating in this A to B bullish move, that broke a previous structure high. As long as this low to high remains intact, we could still see bullish reactions from these levels. So I'm being cognizant of that this week. All right, it'll make a little bit more sense when we go over to the order flow real quick. All right, before we jump back into Canton, I'll just break down all the XRP's price action real quick. Let me share with you guys the order flow charts and why I'm paying attention to these specific levels. All right. As always, keeping you guys in the loop with these updates, we had mentioned that even if we started to see buyers become aggressive at these lower prices, remember in a previous video, we had mentioned that we need to see them overcome all of this sell volume before getting too excited. Well, recently, the recovery that we've had where we started to see buyers throw up a support. This is that daily support that I'd mentioned to you guys that exists at about $1.34. Okay, we can see a trapped seller. We can see a buy wall. We can see this lead to a break in a previous sell resistance or a sell wall and trapped buyers. And then buyers became aggressive enough to smoothly transition through two resistances or two sell walls. However, once buyers pushed up into these sell walls, you can see that sellers defended. So there's a passive seller that exists up here at these highs that trapped buyers and pushed price back down to where it's at now. With that in mind, just looking at the daily, so this is the next support on the daily, which comes in at $1.34, right? So on the daily time frame, that's why I'm paying very close attention to this level as if price comes down into it, we could see a bullish reaction if buyers make an attempt to defend at this buy wall. Slightly above that, we have an area where a previous, you can see here, resistance turned into support. I have a firm belief that this is a very important level. You can see that there was a sell wall here. Buyers broke above it. Sellers likely on the lower time frame got trapped. This previous resistance started to act as a support. Buyers became aggressive above it. So these are the first two areas of interest on the daily using order flow that I'm going to be very mindful of if price can push down into them, where I will start to look to how buyers react. I'm not just going to buy once price comes into these levels. I want to see a delta held pattern at these levels, and I want to see bullish order flow on the lower time frame on the T charts. Coming over here to the 4-hour time frame. Okay, you can see now how this daily support correlates to the 4-hour time frame here. So we can imagine again going from the daily down to the 4-hour. Even if price were to pull all the way back on the daily time frame down into these levels, we could still see a bullish reaction from these lows, right? And that could happen where we're currently trading at here. That could happen here, or that could happen here. That's why for the time being, I'm paying very close attention to how, if sellers push price into these buy walls, buyers react to them. Do we start to see sellers get trapped and buyers become aggressive enough to push price back to the upside? If so, I will start to look for buy scalps to take price higher, especially if that coexists with a bullish sentiment. Inversely, now you guys can physically see why I will start to look for sells only if we break this daily support. This is where we have this triple buy wall here. So I have a firm belief that if sellers are aggressive enough to break through 3 buy walls after having trapped buyers at highs, then most likely they're not interested in higher prices. And what are they going to start to target logically? The next buy walls to the downside. So that would then open scalp positions on XRP to start to take price into the next buy walls to the downside. So the next scalp position, if we break $1.34, we're likely to see sellers take price down into roughly about $1.23. If $1.23 does not act as a support, that then opens the door for a deeper retracement where we could most likely see sellers push price all the way back down into this buy wall, coming in at roughly around $1.12 to $1.11. Worst case scenario, right? But taking this level by level, I'm not just going to assume from where we're trading at now that this is going to happen, because we need to see how markets react to each of these levels on the way down. All right. So for now, I'm still bullish because we're currently still trading in this bullish environment. Once this level is broken, turned into a resistance, then I will start to see lower prices for possible sell scalps on XRP. Until then, I'm going to constantly look for buys to see how buyers can defend at these prices. Right? To the upside. Okay, just in case. First, in terms of deltas, remember we have now the new dark pool coming in at roughly around $1.62. So that comes in right roughly around where the most recent buyers got trapped at these sell walls. Slightly above that, we have another dark pool that comes in at $1.97, which is all the way up here. You can see how many trapped buyers existed all the way up here at these highs. So if we do at any point in time break above $1.62, turn it into support, the next hurdle that we need to overcome before we get super excited on XRP's price is $1.97. So because you guys have now downside targets, the upside target that I will be aiming to achieve, if we can break above $1.60, I'm sure that we'll have much more updates before we get there. But if we did break above $1.62, we'd start to look for targets in the $1.97 range, especially if we can see buyers overpower the sellers all over here to the left-hand side that are likely going to make an attempt to defend at these levels. But that's a little bit of a stretch away from where we're currently trading at, but I still thought that I put it on your radar for now. Okay. So in a nutshell, those are the levels that I'm looking at. I'm not going to get into the lower time frames throughout the week. when I'm doing my trades, I definitely will. I'll do breakdowns using order flow on my day trades on XRP as time progresses. But I hope that you guys enjoyed that accurate analysis, nothing overextensive, nothing hypey, none of that bull crap here in this community, just taking it level by level. And if you guys really do want to trade these markets, this is probably one of the best, if not the best community to do that in. All right. So you guys have my outlook on XRP, bearish and bullish targets, levels to be mindful of from the daily down to the 4 hour. Let's see how things play out. Stepping back over to Canton's price. Okay. Also, too, I forgot to mention to you guys the dark pools on XRP's price have been updated. Okay, so make sure that you guys go into the XRP analysis section. Scalper just recently sent new scalp dark pools and deltas. So make sure that you guys update these because these are new from the most recent or last ones that were updated before. Okay. Canton, the dark pools and deltas are still the same from last week. I don't think anything has changed. He hasn't sent a new update yet. So we're going to continue to go and bounce ideas off of these ones. So on Canton's front, nothing has really materially changed from our last updated analysis. Right now, we're kind of in no man's land. I always call this no man's land. I've heard Uzi call it and talk about it before, where price is kind of just consolidating between two dark pools. This is not where you want to be a market participant. Okay. At least in my personal opinion, in my experience. Why? Because there's a bunch of uncertainty in areas like this, and you can't really gauge where price is going to go to the up or down side. So sentiment is going to play a very key, important role here. The question is, can we see Canton roll over and tap into this 14801 dark pool, or do we see the base from more recent times all the way back over here where you can see a previous resistance is now starting to act as a support hold, and we start to see buying activity at around 16 cents, push price back up into 18 cents, right? So right now it seems that this 16.5 cent threshold is starting to hold some weight, hold some ground. If we can hold this week and see an optimistic turnaround in market sentiment, that will likely open the door for a recovery back up into 18,194. Second bullish scenario this week is if we did see a drop down into the 14,801, we see buyers defend it, become aggressive enough to push price back to the upside. These are the two primaries that I'm looking for right now on Canton. And of course, if at any point in time on the higher time frame we can break above the 18,194, turn it into support, overcome the sellers that have passively defended the 19 cent threshold. At any point in time, we break above those levels, that'll open up the door for some price discovery up into 22 to 26 cents as our next sell dark pools. If we end up breaking the 14,801, I'm still keeping it on my radar for a possible full-blown recovery back down into the 12,257. Possibly even a liquidation of this low from the beginning of January at the 0.9453 worst case scenario. So 3 levels to the upside to be mindful of, 3 levels to the downside. Overall, the analysis still hasn't changed. I'm just waiting very patiently before I aggressively position myself into Canton to see if we can get a slight drop down into 14,801. Taking a look at the daily, we're also starting to see, remember I told you guys about that triple moving average, the 50 EMA is starting to coexist and poke slightly above the 14,801. So let's just monitor that this upcoming week. It would be super nice just to see a nice wick down into this level, buyers defend, step back in and take price back to the upside. That would be like super clutch, super clean price action in my opinion. But we'll see how things play out. Okay. Outside of Canton's price action, that is all that I have for you guys in terms of the update. I want to break down my trade for you guys real fast. I'll leave the floor open, okay, in case you guys have any questions in regards to this week, what to be mindful of, what to pay attention to. If not, then we'll smoothly transition over into breaking down my XRP trade the other day. And yeah, we'll go over that in detail. Why I was taking the trade, what confluences was I looking at, and then what I was seeing on the order flow as well. Anybody any questions on the fundamental backdrop before we roll over?